This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I've got a few kind of knee-jerk reactions to point at, okay? I've got some Bitcoin charts as always, and a little bit of context for the VIX, and we'll take it from there. Before we get into today's episode, I have spoken to the team at camelfinance.co.uk. There is 7 days left to secure this lifetime indicator pricing before we double the prices. And Ben has very kindly given anyone that is not in yet an additional 50% off your first year using code 50YEAR. So for anyone that doesn't know, we're closing the legacy pricing before this big upgrade, and that's what that countdown timer is. And this gives you one last opportunity to lock in an early pricing scheme at even cheaper pricing than before. So if you use this code at checkout, okay, you will get 50% off your first year on the yearly subscription only for the Camel Finance indicator, and then you'll get the legacy pricing thereafter. This offer ends on the 2nd of September, which is what that countdown timer is in 7 days' time. And please note, okay, because this is very important, the discount only applies to the yearly subscriptions. It is a one-time discount and applies to your first year only. There are no changes or revisions going to be made after the subscription is set up, so please make sure you're happy committing before you hit the buy button. And this applies to new users only. You cannot stack this discount on top of the additional discounts that everyone else is using for being an early adopter to this website. So if you still haven't got it, this is basically as cheap as you could possibly ever get it. And like I said, in 7 days, prices are going to double. For anyone that is already on, of course, you have already cemented the lifetime discount, so no worries there. But this is equivalent to something like $422 discount if you sign up for this annual using this 50% discount. So gotta be worth considering. For anyone that's been following my channel in the last couple of weeks, you know I've been kind of picking fights with the tape slaves. I'm not really sure why. I do think this kind of posting, okay, when somebody posts a really zoomed in chart, and it doesn't have to be Bitcoin, I've seen it with all sorts, I've seen it with bond yields, I've seen it with practically everything, right? But people zoom all the way in, they post something like this with no real context, right? No time axis down the bottom, no price axis up the top. They just post this and then say Bitcoin is crashing or whatever. Or they'll say things like buckle up, right? Or brace yourself or whatever. But I mean, realistically, this, as you can see here, is a 2% downside move for Bitcoin on a 70 vol asset, right? So if you care about a 2% move on a 70 vol asset, you are a slave to the tape, okay? And that's not good. You can't be both a slave to the tape and a profitable trader. It just doesn't work like that, right? So you have to learn to be able to see things like this and realize this is just total engagement farming, right? It has no purpose or value. And really, it's kind of disappointing to see this from Tom, because Tom is actually a pretty good trader. But, you know, this is just nonsense. I don't know why he feels the need to post this kind of stuff. And again, you probably see this kind of thing all the time. Here it is from Polymarket, right? The US dollar plummets. And you can see again, like we've got zoomed into the tick chart or the 1 second chart or whatever this is. And we dropped all the way from 147. Let me get my magnifying glass, right? Sound like my wife. 147 spot 80, okay? And we crash all the way down to 147.34. Okay, I mean, again, you have to ask yourself, what is the point of this other than to just kind of drive newer investors and retail into some kind of panic mode? But the most beautiful thing about this, and I really hope this continues to persist, I really hope this is a new trend that is going to continue to emerge here, and that is the community notes have called out the tape slaves and the engagement farmers here. And I really hope this persists, like I said, right? This chart scale of this post is only for 3 hours. The scale is only in increments of 0.1 from 1.473 to 1.478. The US dollar only dropped 0.46 in this time frame in relation to the Japanese yen. And the dollar is mostly flat from 5 days ago and from a month ago. Okay. Now, wouldn't this be a good idea? I really, really hope this gets implemented. I hope that everyone that zooms in and posts these kind of charts will get community noted. Then hopefully the market can settle down a bit, right? There won't be so many emotions. The sentiment won't swing so violently. I don't know, maybe this is some weird autistic lock-on of mine and I need to just get over it, but I do see so many accounts zooming all the way in like this. And you have to ask yourself, right, if you follow accounts like that, like how much value do they add to your life or to your portfolio, right? Anyway, let's move on so I don't end up turning this whole episode into a rant about being a tape slave. As of yesterday, we were talking about how the US government has taken a 10% stake in Intel, and I was speculating and spitballing. Maybe we would see them start to do this in the likes of MicroStrategy, Coinbase, Mara, Riot, okay? And then potentially they could actually maybe start to have some kind of decision-making authority on the board. And then even worse than that, if we're going to go really kind of tinfoil hat and nefarious and sinister on that side of things. Maybe they could even start to force the likes of these companies to sell some of their Bitcoin or do things that they don't really want to do. And I did notice, I was perusing the comments yesterday, quite a few of you seem to think that that was not really an option here. Okay, but already since yesterday, the government has said that it's going to take more stakes in more companies. Okay, never say never. I don't think we can rule this out yet. I also, at the same time, I think it's important to point this out. I don't think we need to get too concerned about this yet either. Okay, I think we'll worry about it when it happens. But you know, it will not be a good sign if the government decides it's going to buy 10% of MicroStrategy and Coinbase and that kind of thing. At least not a good sign for the crypto industry, in my humble opinion. And speaking of Trump, okay, Trump has just fired a Fed governor. Is this going to be a trend that continues? I don't know. But again, this is more theatre for us to watch and enjoy. Getting into some Bitcoin charts, some people are starting to get a little bit upset with this whole idea that the M2 fractal, the global M2 fractal in blue, was leading Bitcoin's price higher. When we have it set up in this manner, it does seem like there's quite a lot of divergence here. A lot of people are now starting to wonder if this really was any use or any edge at all. I did notice that Raoul Paul was quick to come out and defend this, okay? And he says, look, here's the original version updated. He said, we've always said it wouldn't continue to exactly mirror, but contextually should be correct. We've had decent sized gaps the other way around in the past too, and they've ended up resolving by Bitcoin catching up to M2. So it seems that Raoul is still pretty confident that Bitcoin is going to catch up with this. And actually, if you look over the back here, these numbers are actually pretty reasonable, aren't they? Okay. I don't think anyone would be complaining with anything north of 150k at this point. The sentiment seems pretty down, but I will note that sentiment is beaten down into a daily cycle low. As you know, I've never really been a big proponent of this chart. I prefer to play the cycles and somewhat ignore this. But one thing I'm putting a lot more weight on is this pattern repeating here. Notice how we have the range, okay? We deviate to the top, we deviate to the bottom, into a cycle low at the 100 MA, and then we go. And here we've got the exact same setup. We've deviated to the top, we've now deviated to the bottom into the 100 MA, and right in the timing window for a daily cycle low, telling me at least to expect, perhaps, if we're lucky, a big push to the upside. That would at least fit with the global M2, wouldn't it? And as Brett's showing here, last cycle, ETH tested the previous all-time high a few times before a clean daily close above. And at the same time, Bitcoin made lower highs. So there's actually nothing to worry about here unless Bitcoin closes below 108k. So here we are last time, okay? Here's the ETH all-time high. Notice what happens here. We kind of chop around, push up against it, break out a retest, and then resume to the upside. Nice big rip for Ethereum. This is about 100% move right here as well. So if that's to repeat from 4k, that means maybe we get something like this. Retest, big resumption, up to 8k, 9k, 10k even. And again, in the prior cycle, as ETH was consolidating below the all-time high right before the breakout, notice how Bitcoin was pulling back into a major cycle low, which is exactly what we've got today. Bitcoin pulling back into that major cycle low, ETH pushing up against the all-time high. I'll get to the cycle low for ETH as well, because that is also synced up in a minute. I'll show you that. But it does look a lot like what we can get here is a nice big push. And also of note, I've seen a lot of people talking about September being seasonally weak for the crypto space. But long-time viewers of the channel will know I'm often quite dismissive of these seasonal tendencies because they are just that, tendencies, right? I mean, every year since I've had this channel, my long-time viewers will attest to this. We get to the sell in May and go away thing, and I just mock it ruthlessly. And I put up a bunch of data and I go, look, right, this is all BS, right? Sell in May, go away just hasn't worked for 10 out of the last 12 years for the S&P 500. I always tell people to go and do some homework, right? Go and pull up a monthly S&P chart, go and pull up a Bitcoin chart, and do the research. Go back the last 10 or 15 years and see how many times sell in May and go away was the right thing to do. And of course, anyone that does the work sees very quickly that it's BS, right? Like, you don't actually want to sell in May. But for some reason, people kind of parrot that idea around and regurgitate things because they don't want to do the work. And I think this is kind of the same thing here. Yes, technically speaking, September is often seasonally weak. Okay, but that doesn't mean that we have to go down in September now. And actually, I see a lot of people putting a lot of weight on that, which kind of makes me think the pain trade here is higher. And all of this is supported by not just this kind of fractal stuff, not just by the M2, as we've already spoken about, not just by this deviate the high, deviate the low off the 100 moving average into a cycle low and go, but also the fact the daily cycle lows are behind us and the majority of participants seem to be getting pretty flipping bearish here, don't they? So I think there's a good chance that this daily cycle low resolves to new highs. And to be honest, it's still a bit premature to be judging it. If what we get here is a swing here in the timing window for both of these, and then pretty immediately thereafter, we left translate, roll over and fail the cycle, right, back below the all-time high, then I think we can talk at that point. Having failed the daily cycle, having lost key levels, then I think we can start to target that weekly cycle low in October for the next major buy the dip opportunity, which is probably the final buy the dip opportunity of this 4-year cycle. But for now, how do we know with any degree of certainty that this doesn't come next, right? Or this for Ethereum? Because to me, it kind of looks like it should do. And we're in the final stages of the 4-year cycle. This is kind of where the fireworks happen, unless this cycle is fully done. But I don't feel comfortable calling a major top here and saying this cycle's done based on everything I'm looking at. It just doesn't look super toppy to me. We've got no failed cycles, no real true breakdowns, no real trend reversals, no real lower lows being set on the higher time frames and stuff. So I don't know. I'm going to sit here and say I'm still leaning bullish until the market shows me something different. And you know what a lot of people get really annoyed about? And that's super duper uber bullish posting. But again, I'm still going to point at this and say never, okay? Because people have been doubting Gert's massive parabola. Why does that sound sus? No homo, man, no homo. People have been doubting his massive banana, right, the entire way up. But the reality is, this thing does keep making higher highs and higher lows, right? Here's a low, here's a higher high, here's a higher low, here's a higher high, here's a higher low, higher high, higher low. So far, higher high, right? So long as the next low, the next major weekly pivot low is above 74k, right, then Gert's big massive banana is fully intact, and that means that we can't rule this out yet, okay? So shout out Gert. And the last thing I wanted to show you before we get into some charts is we are living in historic times pertaining to the VIX. 69% decline in the VIX over the last 20 weeks is the biggest volatility crash in history. Here it is at the top, 69% volatility crash, the biggest in history for a 20-week period. Now, if we look at all the prior times we had big volatility crashes like this, the forward returns for the S&P 500 were extremely favorable in every single case apart from 1991. So pause your screen and take a good look at this, but it does set us up for continuation of upside and more cycle lows that should be yielding continuous profit for the foreseeable future. So until something changes, okay, happy days there. First of all, the Dixie seems to be in the window for a cycle low, seems to be so far holding breakout, retest, resumption. These are still higher highs and higher lows, but it does have to resolve to a new high, otherwise it's susceptible to a rollover. This red trend line here that we just bounced off here out of the weekly cycle low, you'll notice goes back forever, right? Forever and ever. So if we lose that, we are probably going to break down spectacularly. Something to keep an eye on. But for now, we are still relatively early in a weekly cycle low and still kind of trending up. So it looks a little weak, doesn't it? Like if you were long the breakout here, by the time you got to here, it wouldn't fill you with confidence. Obviously, you'd much prefer a breakout retest resumption to look more like this. But it doesn't mean it's out, right? We'll keep an eye on it and see what happens. I haven't checked the yields in a while, but they are still, roughly speaking, following the tell that to the bond market squiggle. Gold getting dangerously close to what I believe is the final daily cycle low before we move higher. So we'll see about that. And silver should be getting ready, of course, to explode above $50. And I'll be honest, the silver chart looks great. The gold chart kind of looks toppy, doesn't it? It looks pretty indecisive. But again, I keep pointing at these miners. Right, here's the senior miners ETF. Okay, just blasting off towards our take profit target from the longer term account. So I don't believe this would be happening if gold was about to roll over. With that said, a caveat to this idea would be if gold continues to just go sideways for another 2 or 3 daily cycles, okay, then by the time we got here, these miners will be in the sell zone in terms of price. And then I guess at that point, we have to say that was the top for gold and everything's going to come tumbling down at the same time. So maybe what we're seeing here is rotation from gold into the mining stocks. But generally speaking, whenever I see the miners rip like this, it makes me think they're leading, especially late phase of a 4-year cycle like we are now for gold. You know, it makes me think they're leading the metals. So I do think there's probably still one final higher high, but it is important to point out that I will abandon this thesis if the chart does something like this, right? Whilst the miners continue to get into their take profit zones, then it's only reasonable for me to expect the miners to start to lead the downside and the precious metals to go with them, of course, into that 4-year cycle low late next year. But for now, at least, I do think this is a good chance of pushing to the upside, and I do think they're being led by the mining stocks. You know, SilJ as well seems to be leading, doesn't it? It seems to know, right? It seems to know that something big is coming just around the corner. So the silver chart does look a lot better. Of course, we've got our window to take profit for that as well. The S&P, the stock market in general, they're still like extremely strong, aren't they? Right? They're still holding support. We are not that far away from a daily cycle low now. Kind of the second week of September would be the time we'd expect to see one. And then there's probably a left translated daily cycle and failure to give us the weekly cycle low. The small caps are kind of broadening out here as well. Okay, so another one we added in the longer term accounts from a while ago, that's doing fine. And the last couple of things to look at is Bitcoin, right? So clearly that's not the daily cycle low yet, it's clearly not in, but we are still at the edge of this window. So any day now, we should get a swing and a reversal confirmed with a trend line break. And then, like I said, that can become an invalidation level, right? Then we can draw a line under this swing and start to talk about, okay, any trade below that and we got failed cycles, and that's of course bearish implications for the market going forward. But for now, I don't really want to jeet the bags into a cycle low. The Brexit cross is still showing the divergent pattern from back here, just like the last cycle low. So this should cross any day now. And then hopefully we can get a nice big push off from here. And notice how Ethereum is right in the window. Wait, let's clean this up a bit. Notice how Ethereum is right in the window as well for its 20-day cycle. And also notice how the indicator never picked this low. This is a good example of like how this indicator is so overpowered, right? When it got to here, it didn't pick this low and this big green candle to the upside. And so all of this price action had occurred without it picking a low. And I was thinking, oh man, like that sucks. Why has it done that, right? Why has it done that? In fact, let me prove it to you, right? I'll pull up a replay and I'll press play here. Right, and what you'll see is the price, it creeps up, it moves into the expected window, it produces a swing, okay, and then a big green candle, and it looks like a cycle low is in place, right, as you'll see in a moment there. See how it still hasn't picked it, though? And at this point, I was thinking to myself, well, why hasn't it picked it, right? It should have picked it. However, once again, okay, this is showing us not to second guess the power of this indicator. It didn't pick it for a reason. It's because it knew somehow the underlying momentum wasn't there. So now we've come back, whether it produces a higher low, a double bottom, or a slightly lower low, the next time it picks this, I'm sure it's going to know what it's talking about. So that's just another example of how this indicator seems to always know something. And one thing I often preach about this is when it does something unexpected, like, for example, looks like it should have picked a low but chose not to, that is usually a good sign that something else is going on under the hood. So it's pretty cool that you didn't get bull trapped here. We'll see where the next low comes. Like I said, it could be this here, followed by a big green candle. It could be a double bottom, and it could be a slightly lower low. We'll find out in the next few days, but notice how Ethereum is in the timing window to bottom for the daily cycle. So is Bitcoin. And again, just a recap, right? The M2 says we should be going up. This pattern here is repeating to the tick at the 100 MA into a cycle low with a deviation to the up and the downside. ETH is about to break its all-time high, retest and resume, hopefully, okay, as per the red squiggle here, with Bitcoin pulling back into the same kind of neighborhood that we saw back in 2021. And Gert's Banana is doing banana things. So I'm your boy Camel. I hope you're doing well in life. I hope you found some value here today. And until tomorrow, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns and